Hi everyone, today let's do some technical analysis. I'll start off by going through the major indices, starting with SPX, NDX, the Russell 2000, the dollar, ARKK Innovation Fund, which I kind of use as a surrogate for growth. Then I'll go over IEF, which is the 7 to 10 year bond treasury. Then I'll finish up with GLD. Then I'll go over my Robinhood account, as well as my Tastyworks portfolio. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as portfolio overviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Looking at SPX, you can see we had that short-term bearish price action followed by a pretty relentless rally from those lows all the way back up to that top line of the price channel, which we've been following since basically April of this year. And then if you zoom in here, in the last few days, you saw a bounce off of that top price channel down to that second lower level, where we had a little bit of a bounce on the last day of the week. It seems like we might be going into an area where we saw very sideways price action, kind of like we saw through July and into August, which would put us out somewhere into the $4,800 to $4,900 level in terms of SPX. There is a little bit of concern that we are right at the top of the price channel right now, but if we do retest that upper level, there's around 1 to 2% of upward price action available to you. Of course, we have had that relentless rally right off of that 20 EMA, but certainly we are still in a very bullish formation, and there's no reason to get short or really even to close any positions right here. Maybe wait until you hit that upward price channel like we did over here, but right here is in the middle of that price range, and this could certainly go on for several months, and if you close now, you could miss out on this next phase of growth. Especially if you trade options and you're waiting for that theta decay. This is a nice little cycle here where it seems like we're going to stay steady, if not slowly grinding up. Moving over here to the NASDAQ or NDX, I'm starting to use these curves just to see how they fit. And this one happens to fit extremely well. And it does show that we are going to continue to rise and grind out here a little bit based on this current trajectory, and we seem to be using this 20 EMA as kind of a lower level of support, so bouncing between this 20 EMA and this curve that I've drawn, that could certainly indicate much higher prices, as we would be coming into that next level of resistance somewhere around 20,000 points, which is something that we haven't seen for quite a long time. Last time we were in that price range was during the dot-com bubble, where we broke out of that last line of resistance up to that next highest line. So we're certainly not in that full bubble territory the way we were during the dot-com bubble. And if we do see a rally like that, that could indicate hundreds of percentage points of further growth. But that's certainly not what it looks like right now. It does seem like we're losing a little bit of steam. Maybe see a shorter term reaction back down to this level here, and then maybe see a push back up to that next highest level. Kind of similar to what we saw here. So you see the breakout, retrace back below that line. Lots of interactions over several months here, representing only 20% growth over a pretty significant amount of time, 250 days there, before we saw that massive rally to the top of that price channel of around 70%. So there still seems like there's some upside potential here in the NASDAQ. It does look a little bit more favorable than the S&P 500 does right now. Looking at that a little bit closer here on the daily chart, you can see how this line is actually still pretty steep in terms of growth, and it's still, as I mentioned, slating somewhere around 1,800 points, which represents a pretty significant upside still from where we are, somewhere around 10 to 12% from current prices. And if we see any kind of pullback, that obviously increases the possible upside, and this seems like a small retracement based on the pretty dramatic run that we had. And this seems like a small retracement similar to what we're seeing on the S&Ps, just because this was a pretty strong run and they needed a little bit of time to cool off. Moving over here to the Russell, this one is a little bit more interesting just because we are in a kind of a price discovery here for the Russell 2000. We had these very long-term channels that go even further back. If we look here at the 1 week price channel, the 1 week chart here, you can see these very long-term channels that have been dictating price and price reactions for all the way since 2000. And you can see we broke out above that highest price channel, and it just wasn't quite fast enough. And even now we're retesting that higher price channel that we saw before. Going back down to the daily chart here, you can see we broke out of this highest price channel, created some new highs that we've kind of respected here for a couple of months. Since then, we had a little build and then a nice pop up to that level again. And looking at that closer, you can see that pop just above and then retrace back below. And then we're back below that price channel here. And it seems like we might respect this level that we've created, which would represent a little bit more downside price action here on the Russell, which would look like just around 5% or so to retest that level. And then a nice little pushback up is my expectation. And if this continues to build, there's no saying that this upper price channel that's relatively young compared to all of the others is going to hold. And you could certainly see this extend out, representing a chance to break up here by March of next year. And who knows where the Russell's going to go after that. This is certainly something we've never seen before here in the Russell, and it could represent some potentially strong gains. Moving over here to the US dollar or DXY, on the 1 week chart, you can see this massive wedge formation that we have coming here. And it's starting to get pretty narrow here compared to the large wedge that we've had before. We're certainly in a pretty bullish structure here in the recent weeks, and it continues to rally and looks like we're going to come back up and retest that upper bound of that very large wedge. Going down to the 1 day chart here, you can see what that's looked like. It's been pretty aggressive, and we saw a very strong push towards the end of the week, which is surprising because the markets did rally just a little bit on the last day. I guess that's the red day that you have here right at the end. But even in this smaller channel, it seems like we have a little bit of downside potential since we are at the top of that channel, representing maybe 0.5 to 0.75% of downside risk if you're trading bullishly on the dollar. But generally some bearish price action in the dollar is going to be bullish for stocks. Moving over here to ARKK Innovation on the weekly chart. This only goes back to 2014 when it was founded, but you can see we've been in a very bullish pattern since February of 2016, where we had the low at around $15, which then rallied all the way up to $150 in 2021. And since then, we've had a pretty good cool off down to that middle channel, around 38% or so. This is still not to say that this is a bearish pattern by any means. We've actually found some pretty solid support here at this middle channel. And this middle channel really has the most reactions. We only have 2 here at this lower channel. And then this upper channel is really just based on this same slope of the middle channel, but at the high point, but at that all-time high that we generated in 2021. And if we do see a nice little pop back up to those highs, could represent a very strong 75% of upside potential if this lower channel continues to hold. But of course, this could be a slow grind up, which would really only represent around a 20% growth or so over the next couple hundred days. But looking at this on the 1 day chart, you can see we are making a little bit higher lows, and it looks like we might have another higher low here. And if that is the case, it seems like we've potentially broken out of this longer term down channel. And we've now retested that line, and it seems like we're getting a little bit of a pop, a little bit of bullish price action off of that support level. And of course, we have that longer term support channel down there, meaning this could be a great opportunity to get back into growth. And if you don't know any specific growth names that you like, Growth Innovation could be the right place for you. Moving over here to the IEF index, or the 7 to 10 year treasury bonds, you can see we do have this bearish structure right here that's been moving downward since the middle of August 2000. Zooming in here, you can see we did create a little bit higher low here, but then we hit that lower high, and it seems like we made another lower high, representing a move back down from current to about 2% lower, where we have another support line, which would be a great lower low potentially from where we are now, again indicating some more upside for stocks from current prices. And lastly here we have gold. It's been in a pretty long-term downtrend here since the beginning of August of 2000 to current prices at around $174 per share, with some pretty decent lows here at 157, again here at 161, 161 again. Nice little double bottom and a higher low represented right here. And then we had that nice move up. I wasn't sure if we were going to break right through this level here at 171, which has been a pretty consistent level of reaction. And then we broke right through that downtrend channel, representing the most recent high as well as that long-term high, representing a shift in this technical picture and an upside potential of around 2 to 3% here up to that 180 level from current prices. I do suspect we might see a little bit of a retrace similar to what we had here. Retrace back down just a little bit, retest this support level. And then as long as we hold there, it would be a nice trade back up to that level, back up to 180, around 5% growth in gold. It seems to be reacting to that strong inflation number that we saw come out earlier this week, around 6%. And gold seems to be a good place to go from here. Moving on to my Robinhood account. You can see over the past year, it's been really solid. And finally, on the 3-month, it's looking a little bit better. Even on the 1 month, looking pretty good. And then in the past week, basically flat, but still decent on that move up here over the past couple of days. And starting to see that 3-month creep up as well. And looking at my positions here, you can see I sold some short-term at-the-money puts here in Ford. Ford has been on a pretty strong tear. SLB, very good oil play. Seems to be slowing down a little bit, but still pretty strong. Pinterest, these were sold after Pins had that really strong move down. And I'm still bullish on Pinterest from where it is now. Then we have PLTR, which seems to be coming into some support at the $22 level. Snapchat, this was sold before the strong move down. And you can see it's still hovering right around that price at $53, with my puts being at $50. I'm okay with that. And I still think we're going to see a nice little rally from $53 going forward. And then we have SLV. This is a covered call for my stock position in silver. I was signed at $24, so this is still a nice place to be. Even if we get those shares pulled away at $26, I'm still good with that. And that doesn't include any credit that I received for selling those puts initially. And then Tattooed Chef, this was another assignment here at 100 shares. I was assigned at $18, and I am looking for a nice move up as the last day of the week was not very strong. And really, it's not been great for a while here. But it does seem like we may have found a bottom here with that low at $58, and then a little bit higher low here at $16, and then a nice little move up. If we can break out of that, I think we'll be all right. And I might look to sell some calls if we have a nice strong rally. Moving over here to Tastyworks, you can see back up above that $50,000 level, mostly because of money added and then some of the rally this week. And then with my IRA here at just under $14,500, I do have some money I need to move over into here. Plus, we're coming into the end of the year, which means in January, I can start adding to this portfolio again with the IRA, and that'll be good for the next year. Otherwise, looking at my individual positions, you can see I sold some S&P futures puts right around 4,615, and it's still sitting at 4,681. A little bit of a rally after I sold these 2 contracts. And it's currently in a small profit. Then we have Boeing, been trading this one for a long time. And this is way out into December with a break-even price of around $200 per share. If you've been following my Boeing videos, you would know that this is definitely looking quite strong here. Had a downward channel for quite a while. We've since broken up above that channel, retested it, and it looks like we're starting to see some upward price action as you see these ATR bands start to curve back to the upside. Otherwise, next we have Fiverr. They had very good earnings and rallied aggressively. This is also a very volatile stock, so you can get a lot of credit in here. Did skip Bitcoin here, bought this right around $65,000. It's in a small loser right now, but I still think Bitcoin is in a strong bullish channel, and it's going to make new highs soon. Disney went down quite a bit on earnings, surprised a lot of people that it went down quite so much. And if you look at this on the daily chart, we are way down here at the bottom ATR band. And if you look at the weekly chart, we're coming into that 144 EMA on the weekly chart, right around $150 per share, going all the way back to prices we haven't seen since November of last year, meaning that I think this is a pretty good buy, and my break even here for Disney is actually at 158. So still in a fine position for me as long as it holds right here, but I have 30 days until those contracts expire. Moving over to GDX, this is actually a leftover protection position because it did rally and I closed the puts that I sold. 3M, this is a ratio spread. 3M did come down a little bit off of its highs around $200, and it seems like a decent buying position here now. Morgan Stanley, nice little profit. Match.com, this is one of my bigger losers here. You can see dropped quite a bit. Looking at my break even here for Match.com, you can see right here at my break even is here at 147.50 and the stock is right here at 147. So if we do see a little bit of a rally, that would be okay. It is still in a pretty strong bullish price action here on the weekly chart, and it seems like we will find some support and a nice little pop, which would allow me to close that position for a profit. Moving down here to NEO, down here at $38, still fine, a little bit of a profit. PLTR, as I mentioned, is going down a little bit, but still comfortable at that $22 level, which is right where I sold those puts. Texas Roadhouse down a little bit. Comfortable buying the shares here at $90. Texas Roadhouse has been in a little bit of a short-term downward channel, but that's coming off of a very strong bull run, and I expect we'll find some support here at $87 and a nice move back up to recent highs at around 107, which would be a great trade. URA, been talking about uranium for quite a while, sold 2 contracts here at $27 out to December 17th, and I got that for $190 credit for those 2 contracts. Got Welltower here down at $80, nice little profit. American Steel, $23, sold those puts, nice little profit. XLE, again, another leftover protection position, took profit here. Might look to enter a new trade on that one, but we'll see. And then we have XOM, small profit, doing well. And then Yeti had a strong last day of the week, but still was down from when I took this position. Comfortable buying the shares here at $94. After this really strong rally, makes sense we had a little bit of a sell-off, which is when I entered, but it went a little bit further down than I thought. Otherwise, that's all my positions. Let me know down in the comment section what you think of the major indices. Are we going to continue to see higher prices? Is gold going to continue this ridiculous rally it's had recently? And will the dollar and bonds start to turn to the downside and allow for stocks to rally? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.